Hello, this is Nariman Behravesh. We're talking about the September update of the USA Today IHS Global Insight Economic Outlook Index. The key takeaways are that the economy has finally bottomed out and that GDP growth is firmly in positive territory, and specifically that 7 out of the 11 subcomponents of the index are on the rise, some of them very strongly. Some of the strongest gains in terms of the subcomponents are, of course, the stock market, which everybody's aware of, but also export orders and capital goods orders have shown very strong rebounds, and they're primary contributors to the turnaround that we're seeing. Well, the job market always lags the recovery, and often the early phases of a recovery feel like a jobless recovery, and I think it'll be very similar this time around. But the good news is even there's some improvement. We're starting to see a bottoming out of hours, for example, after dropping. Hours have leveled off. Very good news. And then more broadly, we're seeing the job losses in the economy at a much slower rate. And that we can expect to continue going forward. So things will improve, but unfortunately, there will continue to be some job losses, and the unemployment rate will rise for a while longer before it finally peaks out. The fact that this expansion is following a very typical pattern where employment lags the recovery is not reason enough to put in place additional stimulus. It may be too much too late almost if we do that. I think it is time to let the existing stimulus work and let the economy begin to recover in its, again, typical pattern where employment does lag economic activity. It's going to be a long time before inflation becomes a serious threat. By that I mean 2 or 3 years, in the sense that with the unemployment rate approaching 10%, with huge amounts of excess capacity in the U.S. economy, inflation is not the biggest threat. The biggest threat is the possibility that this recovery could be very tepid, very weak, and that we could possibly, although not likely, have a relapse. So the Fed is much more worried about that than it is about inflation. So it's not likely to raise interest rates, certainly not before, say, the middle of 2010, and probably more likely the end of 2010. The September update of the USA Today IHS Global Insight Economic Outlook Index suggests that things are on the mend, the economy is recovering, and it will start to improve even more so as we go forward.